a company almost nobody had heard of a week ago, just cost the world's most important chip tool maker $44 billion in an afternoon. Here's what China actually built, why the market panicked, and why some of Wall Street's sharpest analysts think that panic went too far. Both stories are true, and only one of them tells you what actually changed today. First, what China actually built and how real it is. Shanghai Aishingna Electronic Technology Group was formed in August 2023, backed by two state-owned shareholders with about $1 billion in registered capital. It absorbed teams from two separate lithography efforts, Yuliangxing, tied to Huawei-backed Sicarrier, and SMEE, China's longtime national champion in this space. The plan, about 5 immersion DUV machines delivered this year, rising to roughly 20 in 2027, going first to SMIC, Huahong, and memory maker CXMT. For context, that is a small fraction of the 131 immersion DUV systems ASML alone shipped in 2025. Reuters, which broke the story, included its own caveat directly in the report. The machine still needs further testing and remains far from matching its Dutch rivals' competing models. That kind of hedge, from the outlet that broke the story, is worth taking seriously. That line matters. This is a genuine production milestone, not yet a genuine competitive threat. And blurring those two things together is exactly what sent the market into a panic it may not have needed, at least not yet. Second, what the market's reaction actually looked like. ASML's stock fell as much as 8% that day, closing down more than 5%, wiping out nearly $44 billion in market value in a single session, its steepest one-day drop in more than a year, on a stock worth roughly $640 billion. The sell-off spread fast. Chip stocks AMD, Nvidia, and Micron all fell the same day. So did equipment makers, Applied Materials, Lam Research, and KLA in the US, and SoITech and Infineon over in Europe. A single Chinese production run moving stocks on 3 different continents. That is a lot of fear for one state-owned company's first production run. It tells you the market wasn't just pricing in this one announcement. It was pricing in what it might mean years from now, not just this year's handful of machines. Third, the case that this panic went too far. Bank of America's Didier Scamama called the sell-off an outright overreaction, pointing to ASML's still massive edge, 330 wafers an hour of throughput, and 2.5 nanometer overlay precision. Spec's Chinese tools aren't close to matching yet. JP Morgan called the market reaction disproportionate, and BNP Paribas called the domestic tools a gap filler, not a real replacement. There's a deeper reason the threat looks smaller up close. China's share of ASML's total revenue had already fallen from 33% in 2025 to just 16% in the first half of 2026, before this specific news ever broke. That's the real twist. Export controls already did most of the shrinking Wall Street panicked about, which means this specific announcement changes far less about ASML's near-term numbers than the stock reaction suggested. The exposure most at risk was already walking out the door. Fourth, why Beijing pushed this through anyway? Because Washington is trying to close the last gap. The proposed MATCH Act would give the Netherlands and Japan 150 days to match U.S. export rules or face expanded controls, and it would ban servicing the DUV machines Chinese fabs already own. That servicing threat is the real trigger here. It's not just about buying new machines anymore. It's about not being left stranded with tools nobody is legally allowed to repair, which is a much bigger operational risk for a running fab. And the workaround already works today. SMIC is running 7 nanometer class chips at real scale, using only multi-patterned DUV, and its newest 5 nanometer class node hit a transistor density that actually beat TSMC's N6 using a technique called self-aligned quadruple patterning, without a single EUV machine involved. That is the real proof of concept. Domestic tools don't need to match ASML's flagship machine. They only need to be good enough to run a recipe. SMIC has already proven works, at whatever yield and cost that currently allows. Finally, what this actually adds up to. Step back, and the chip world is splitting into two tiers. 1. Anchored by ASML's EUV monopoly, building 2 and 3 nanometer chips and AI memory for TSMC, Samsung, and Intel. The other, built on homegrown DUV, expanding China's mature node capacity for its own market instead. The irony writes itself. An embargo built specifically to freeze Chinese chip equipment instead forced 3 separate rival Chinese efforts into one single state-backed company, funded, staffed, and racing toward exactly the outcome the embargo was designed to prevent in the first place. The real question left standing isn't whether China caught up to ASML. It hasn't, not yet. It's whether Washington's own next move, forcing allies to choose sides within 150 days, ends up reshaping this industry more than China's new machine ever will.